recap for Wednesday, February 14th. Happy Valentine's Day, everybody. Let's get right into some of the themes of the day that we saw today, and we'll go over all the price action. We'll talk a little bit about a couple concepts that we talked about in yesterday's video as well. Risk disclaimer in front of you. Everything that we're going through, of course, in this video is for information purpose only. Please read the full risk disclaimer there. So just to kind of go over the numbers really quickly, SPY, you really kind of chugged along there from the afternoon on to finish up very close to 1% for the day. The Qs did finish up a little bit over 1%, and then the star was the small caps. A lot of a lot of volatility day to day. Talk about trading a range within these small caps. We talked about in the pre-market session that they came right back down to that 50-day moving average, right? And I think that's the third time that the small caps have held there. So I will review that. I wanted to talk about just a couple concepts that I started with in yesterday's video. Which is the VIX, right? The VIX was up to, topped out, I think over 17, 18. Yeah, I think it was very close to, if it didn't hit 18, it was very close to hitting 18 yesterday. So back down, a big move back down today, down 9%. And, an inside day, if you want to, use a candlestick type pattern, but overall, like volatility really kind of came out, pretty decently. And, it reminds me of what I referred to yesterday as other bouts of volatility, in terms of, when we see a big spike in volatility that we just haven't seen in a while. And I think one of the things that I think was a positive was that you had this long wick in the candle yesterday. So down pretty decently, all the way back down to 1430, which is pretty amazing considering those percentage moves in the VIX. Before we get to tomorrow, just keep in mind, we still have a lot of events to get through this week. So it's tough to really, I don't think that you could really get that complacent or comfortable with this market, considering that we've got retail sales out tomorrow and that you've got PPI. And going back to what we saw yesterday, and I think a lot of that had to do with that the market was probably priced to perfection considering the run it's had. But after a move today, it wouldn't surprise me that we get some volatility tomorrow, especially if that retail sales number comes in hotter than expected. They're looking for month over month negative 0.2. I don't know why. I don't study these numbers, but they're only looking for a negative 0.2 for month over month. When you strip out X auto, they're looking for a positive 0.2. So anyway, that will be at 8:30 tomorrow, and then we also get another gauge of inflation, which is weird that it's separated by this far, but that will come out at on Friday. We get the PPI number again. Odd to see that how far away it is, but from the CPI report, usually they're back-to-back days. But in any event, I wanted to start there, and then we could kind of talk about some of the technicals. So just to watch how today unfolded, and the breadth was strong for the day. But it did get it got a little bit weaker from where we were. We started very hot out of the gate. The tick index was like well over 1,000, and on the open. And, there were some buyers coming in on the open, and then we kind of checked back here a little bit, almost to the bottom of value. So I often mention that the market webs really give me, what I refer to as a roadmap, right? Where I know it kind of helps me make decisions, because I was adding some risks this morning, and I said, okay, let's see how it goes for a little bit. And, we had this chip, we almost had the check back to the bottom of value. And, then we had a nice hammer looking bar here, and we managed to really kind of continue to go higher. So notice we did not get back to where we were yesterday. But sometimes it does take a little while, and we could also back and fill a little bit and then go higher. There's a number of different things that could transpire. Again, note that yesterday we talked about the virgin point of control takeout. Those are really good and can give you clues too, for where you want to basically, if you want to try a trade. But nice reversal off of that. Let's just look at the daily chart too. Because I mentioned today looked more of like an inside day, right? And if you look at this here, So let me center this appropriately. Yeah. I mean, almost, I don't know if that's perfect, but it kind of felt like a little bit of an inside day. And I get this, if I can get this volume down. I don't know why that's so large on my chart right now. Maybe I did something here. No, I'll figure that out at another time. But so overall, like, nice to see us hold the 20-day moving average yesterday. Not completely back above the 5-day moving average. Same thing with the Qs, different looking candle, but in reference to the 5-day moving average, didn't quite get above there, right? And then IWM. Right. Notice that IWM. So here is the 50-day moving average that I've referred to, this line coming in here. We kind of got almost down here back in January, held it, and then really did a good job of it back in the beginning of February. Obviously ran up here and right back into that 50-day moving average. So that's kind of what I would, if you've been long the IWM or buying them on dips, I would continue to watch that 50-day moving average. Of course, I like the value areas too, but just price has been just moving in and out, and it's been whippy, and that's how it's been for the IWM, even though it really doesn't seem to really get too far. Just the price action on a day-to-day basis is just, is all over the place. I wanted to talk a little bit about the macro, right? Because I spent a lot of time, and if you were a regular viewer of my videos, you know that one of my concerns has been bonds and what's been going on there. And so it's nice to see TLT, which was up about 0.5% today. It's really going to be a case of by the end of the week. And I think both that retail sales number that we're going to get tomorrow and the PPI report could sway this to whether it closes inside the value area for the year. And I'm going to just move this to the weekly chart so that you can kind of see what I'm referring to. But here we are, right? We're sitting here right at the bottom of the value area. Well, why is this important? Because right now, as long as we're inside the value area for the year, that means that basically we're sideways, right? If we start to break that, we're very close to doing it. So watch this 92.66 level in TLT, right? Then you know that we're trending down again in TLT, and that means that rates are going higher and more things are going to be impacted by that. But I'll tell you, that just wasn't the story today, and it has been amazing. Some of those more sensitive areas, like solar, for example, was up 4.8% today. So I don't know if the market is kind of getting past it, or maybe thinking that just the volatility, maybe I'm making more out to be that that's there in TLT. So, like I said, I will get more comfortable with TLT as long as we manage to stay inside that value area. But very strong, those solar names. And the name that I'm playing in that group, which is not even, it's like it's a measurement company, but it had really good earnings, which is this NXT, which tacked on more gains today. And was one of my best winners today. So really nice earnings, spent some time consolidating. And, we're seeing this, and this is why we keep at Tribeca Trade Group, we keep a list of all the earnings gap names as well as strength names. They don't have to gap up as strong. Sometimes it could be a more subtle move, but I think with the list that I have right now is over, let's see if I have it right in front of me. What did I do with it? Not there. Earnings gap lists. I've got 84 names right now, and there's names gapping up in the after hours too. But this goes from a couple of weeks ago when the official earnings season started. We've got 84 names, and NXT is one of them. But there's just a lot of names that are doing this, right? Where they're just kind of consolidating, but most of them that I've seen so far are resolving higher. All right, so that's that. I also just wanted to cover the dollar quickly here. The dollar gave back some of the gains yesterday. Again, not all of the gains yesterday, but the dollar futures I saw were down about 0.2 of a percentage point. So reminder, I think that they were up about 0.5% yesterday. So giving back some of those gains from yesterday. So again, these those continue to be must watches. I'm going to talk about a couple areas that probably no one else is really making that much attention over, but because I think it's really interesting, and I get it. Like everybody's talking about SMCI and Nvidia and some of the other, a couple of the other semi names, a couple of the other AI plays. I get it, right? That's where the hot money is, right? But I like to kind of just go through and see, because again, you turn on, any financial media and that's what they're talking about. And they're making it seem as if those are the only names that are going up right now. Well, that's not true at all, because look at what the industrials are doing. Right. The industrials, I've talked about the industrials now for a good couple of weeks. What really kind of caught my attention is just, the breadth that we're seeing in the industrials, right? There's various different industrials that are moving higher. And, a lot of that has come from earnings. It's been one of the most impressive groups that I've seen for earnings. Names like Eaton, right? Which I think was very close back out to new highs. This is another strong earnings names, but also the transports, right? And, they continue to push higher too. Now, they did move Uber into this ETF, and I think Lyft is in there too. But you could also find names like XPO and PCAR, which are doing really well. So it's tough to really, like, I understand why some folks are getting a bit bullish, right? As we see, some headwinds like interest rates and the fact of, that February is not a seasonally strong month. So I totally get why people are pumping the brakes a bit, and saying that, hey, the price action has gone a little bit too far. But it's really tough to get super negative when you've got the transports, you've got industrials, you've got the home building ETF that looks really strong. I continue to see some, names that are very close to breaking out. Like, for example, this name, right? MOD. Right. Look at this one. Right. And this is like another building construction company. They're a little bit techie too, right? But this is Modine Manufacturing. So there's a lot of positive things going out. And when we look at overall breadth, right, one of the things, and it'll be interesting because I look at the NYSE every couple of days, which is the McClellan Summation Index, right? And we've been watching that line since the end, really, I've been kind of really, talking about how that line has started to move down, meaning more names were going down versus up since the end of December. But over the last week or two, it's kind of been going sideways. So it's been a fight between, like, some names that are going down and some names that are going up. And, I also put out in my midday note, one of the things that I go over, just see if I could find, I should have the midday note here, right? But I put out, what the S&P 4-week new highs versus 4-week new lows. Now, yesterday, we definitely saw more new lows, as you would expect after, a move down like we saw yesterday. But, again, here's the industrials, right, that are just showing, a lot of strength. And so, it's not just Eaton, which I mentioned, but GE, JB Hunt, CMI Cummins is another, like, transportation name. There's Picard that I mentioned, Emerson, right? So, not bad to see that, after yesterday's move down, to see so many of these industrials break back higher. And again, the other thing is too, there just hasn't been that many in tech, right? In the S&P. Now, again, NASDAQ looks a little bit different, but, and on the weak side, it's been energy, it's been consumer staples, and it's been, things like the utilities too. So, Bitcoin is another thing too. Like, I do view Bitcoin as a little bit of, in terms of like a risk on, right? And Bitcoin breaking higher. So, so like, how negative can you get? I mean, with this stuff going on. So I think, my plan, and I'm going to go through some more charts, because I think that there was a number of interesting ones. So, even like things like Netflix, this is something that I've been waiting for the last couple days. I just thought another earnings gap name, spent a good while, in digestion, but now it looks like it's ready for new highs. Meta is another one. So I'll continue to go through these, and then I'll talk about kind of my strategy for the rest of this month. Yeah. So here's Meta, right? Breaking back above the value area. Really the level to watch here is 471, right? So another attempt, here, kind of got rejected a bit, but I think maybe the second attempt might be a little bit better here. Biotech had a good day as well today, right? Looking at, again, didn't come back all the way to where it was, but let me just switch back to the daily chart. But really, my strategy is considering the seasonal weakness, right? And as long as, let's say, the S&P is above the 20-day moving average and the Qs and the S&P are both above the value area for February, I have no choice but to basically follow the price action, right? Because I am more of a trend trader, and I do believe, price is the number one indicator out there. So why would I go against things that are continuing to act well, right? Now, of course, I want to be aware of things like the CPI report, PPI report, and so on and so forth. But overall, you can kind of short, like in baseball, they call it like shortening up your swing a little bit, right? It's kind of the same thing in my opinion right now, is to basically like shorten up your swing a little bit, right? It's a tougher. We know that it generally the second half of February, which tomorrow is the 15th. Obviously, it's a shortened. It's not a 31-day month, but I'm just taking more targets frequently, right? And taking some of the trade off. Like for instance, I put on VRT was one of the names. I'm not sure if I mentioned this in yesterday's video. I mentioned a lot of names in yesterday's video, but look at the hold on the 20-day moving average as well as the top of value, and boom, right back out to new highs. So this was a name that I got long today, and I took a couple targets with it too, right? And going back to a couple other names that just are a little bit outside of the tech world, right? Costco. This is another name that I love to buy on dips. And my plan for the day was I bought the dip today, right? After yesterday's move down. And my plan was that I would add more if it did come all the way down, right? And test the top of value for the month. But it didn't get there. And again, I took a target into today's strength, right? So that's the theme right now, taking targets. Net, I thought was pretty impressive today too. Another earnings gap name, took out this big VPOC. So again, normally that's what we see, right? When we move right up to here is some digestion, but look at how it fell right back to the 5-period moving average and holding it. Now, what I like to do as usual is just to look at what I, see if I notice anything on the 1-hour time frame. Also, right, number of overhead supply, and that's why this name kind of came in a little bit. Is just that there's a lot of overhead supply there. But look at where it fell back to, right into the top of value. And that's right around like $100. And it's holding that. So again, like this is a trade idea, right? Go long versus $100. It's not that extended above there because this is generally a little bit of a faster moving stock. What can you say about Uber? Amazing. Uber have had in the TTG trend portfolio now for a while, continuing to work well. But huge gap up. And this, I'm not sure if we went over trying to see my notes from yesterday. I'm not sure. I don't think I went over this one in yesterday's video, but it was on the list. Also, same thing coming into the 20-day moving average and into the top of value. And no doubt about this one today. Huge day for Uber and very, very impressive. Yesterday, I did talk about CrowdStrike, right? Back out to basically closing new highs. I was really impressed with this one yesterday, but same thing, right? Check back to the 20-day moving average in the top of the February value area, right? So how many times, can you say that? And the reason why I bring this up too is saying this over and over is because it's a really good setup, in my opinion, for names that are in defined uptrends. You get that check back to the 20-day moving average, you make sure that it holds it, and then you can try a trade in there. A few other, what else do I have? I did go over NXT. FTAI was a name that I tried. Another earnings name, same thing here. Check back to the 20-day moving average. Again, not as powerful as some of the other ones, but I like having something outside of tech, just for a little bit of diversification. And I like the group too. ServiceNow, right? Also dipped a little bit further, not the same exact setup. The 20-day moving average was all the way back inside value. Let's see if it can get right back above that 5-period moving average, right? So this is one to watch for tomorrow. Of course, SMCI, and maybe I'll end it here, but continues to run unbelievable at this point. What is the RSI? I know some people were talking about this. I mean, it's a 94 RSI. It is really extended. We know that NVIDIA is going to report earnings next week, right? And I think that's a week. I think that's the 21st. So yeah, super extended here. And I took some profits, by the way, in this today. I've been holding this in the TTG trend portfolio for a while. I reduced my exposure in both SMCI and NVIDIA. I didn't take them out, but I just said, this has been a huge move. And I'm taking some profits here in my, in that longer term Tribeca Trade Group TTG trend portfolio. All right, guys, that is it. Of course, we had a webinar earlier in the week. I will put that on. I will release that. But you could go to marketwebs.com and you can get involved and get the market webs, get the system on your screen for TradingView. Let me know if there's any questions about that. Guys, have a great night, and I'll see you tomorrow.